Hey everybody, and welcome back to Crypto Kings. My name is Matt and it's a pleasure to be back with you guys on the channel. And in today's video, I'm going to be talking to you guys about what I believe is one of the most impressive recoveries Shiba Inu has ever shown. So if you guys are new, make sure to drop a like and subscribe for more daily SHIB vids. Let's get right into it, folks. So if you guys haven't seen what we're working with here today, folks, what we are seeing is, yes, a slightly lower price than, of course, last night when we surged all the way up to 87. But what's amazing about this is we're watching a really strong recovery from this crash I talked about last night in my last video, where you guys can see, of course, we went down all the way to 57. And a lot of people said, oh, that's not a crash. Look, you know, in the real world, like when an asset loses like 30% in a day, that's considered a crash. And SHIB definitely did crash last night. But again, it looks as if it had an amazing ability to recover. And that's what I was theorizing in my video yesterday. So you guys can see, of course, market cap here, we're at $40 billion in market cap, which is still hard to physically believe, because I remember like yesterday when the market cap was 1 billion, 2 billion, and the number of holders was greatly lower. And of course, the volume, guys, the volume here, $41 billion here in the past 24 hours. I think this is the most volume ever. So this is literally mind-blowing, like I have said. But when we take a look at the chart here, folks, after you guys can see, of course, we hit this kind of brick wall here all the way at 87, we see a crash and we see a recovery very quickly, which is fantastic. But you know what else is fantastic? Getting started trading on Webull, guys. Top of the link down below in the description. It is so easy to do. You guys can go over there, trade stocks, crypto, anything you guys like. And of course, if you guys use my link, only if you use my link though, you guys will get 2 free stocks, potentially valued up to $2,300. And people have gotten lucky with it. I've seen, you know, gotten shares of Apple and fractional shares of Facebook. So it is very possible to get lucky. And again, it's just a good thing to do to get started investing and building yourself a stock or crypto portfolio. So if you guys enjoy the channel, want to support me, I always do appreciate the love. Top of the link down below in the description. Like I was saying, folks, when it comes down to it, what we watch here is sort of running up into a brick wall. And of course, when we take a look at the MACD, you guys can see we enter kind of a turning point. And the MACD here essentially will track when it is considered ideal to buy and when it is considered ideal to sell. So you guys can see, of course, we head all the way up towards the top here. I mean, all the way. And then immediately it charts out some red for us, meaning the MACD is determining that this is a good time to sell. I also love to check the relative strength index, which I think is always a fine thing to look at. So the relative strength index, again, isn't always accurate, but I do think it has helped me in the past get a better estimate and a better gauge of whether or not an asset is overbought or oversold. So you guys can see we've been treading on some thin ice here for a while. You guys can see that SHIB for the longest time here has been above what the relative strength index would consider normal and appropriate for that time. So again, when we look at this, you were way outside the 70 zone, and the reason why that's a problem is because within the zone of 30 to 70, it is considered to be normal, you know, less volatile buy and sell volume. Once we are outside of that 70, it is saying, yeah, we're a little bit overbought, we were a little overextended, a little overspread, and therefore there should be some level of pullback. And you guys can see that just about every time the relative strength index is past 70, we get some pullback. Here's a perfect example. We get past 70, pull back. You guys see the same thing here. We get past 70, pull back. And in this instance, it was just a little bit sharper of a pullback. So again, I don't find this particularly concerning. Like I've said, you know, putting in your net worth into SHIB at 87, probably not the best idea. And, you know, a lot of people will say in the comments, oh, that's being negative, yada, yada. Guys, I like to be honest, man. I like to be honest. You can believe in Shiba Inu and crypto while also trying to, you know, be honest about whether or not, you know, in my opinion, it's a good time to buy. And again, buying at the all-time high, man, probably not the best idea. Like I said, there will be some zones of pullback. If you would have set a limit buy order, let's say on Coinbase Pro, you could have set a limit buy order at, say, 57 or let's say 60, because you probably wouldn't have thought 57. Let's say 60. You could put it at 60 and you would have immediately bought 60 while you were sleeping or something and woken up, and of course seen it at 71, which is a very nice increase. So again, I think that is generally the best way to do this with SHIB, is to find some way to be able to sort of dollar cost average in at a cheaper price. Dollar cost averaging in this sense means you're adding to your SHIB bag every time it gets a little cheaper, so your overall average is going down or increasing only slightly. So that's what I would say is probably the best strategy in terms of this. I also do like to check out, of course, the Fibonacci Retracement, which I will do in just about every video, but you guys can see we are going to stretch things out here. So it is analyzing the most recent run, which of course you guys can see starts at 87, heads down all the way to 57. So it's taking into account the very high and the very low here on the 24 hours or so. And essentially what it is doing is it's saying, yeah, we essentially head down to 57 and then immediately we bounce back to the 23.6% line. So here's an example of the Fibonacci retracement working extremely well, because right after we hit that crash, you guys can see it immediately bounces up to the 23.6% line. That means that out of this decline, out of this entire crash here from 87 all the way down to 57, we have managed to recover 23.6% of that, roughly 23.6% of that. And you guys see that's why everything is sort of bouncing off of this line. And then of course we have a little bit of a volley here, and then we come over to 38.2, and that's where we're sitting right now. So now the 38.2% line is acting as the new line of resistance. Now, it could, if everything stays according to plan, just consolidate here and go and trade horizontally like that. It is also possible that the 38.2% line will fail as a potential support and will be back down to the 23.6% line. So that is my general guess on in terms of price target where I see this going. Again, I'm not a financial advisor. This is not financial advice, just my personal opinion. But again, I see this generally heading down to 57 like it did last night. Only once really, and then having a little bit of a bounce, a little bit of a recovery. I don't see it sitting at 57 forever. Rather, I see this recovery working at the 23.6% line and perhaps just kind of bouncing up and down on that line. Again, if we want to be more ambitious, we could say perhaps the 38.2% line and have it bounce here. That is very possible. So those are just a couple of scenarios I could see potentially happening for future price. And again, guys, always do, try to take these indicators seriously, but not your sole basis for trading. And again, there is a time where you kind of want to have a hunch or have a bit of intuition and let that guide you as well. But again, these indicators are just here to give you a little bit of a warning sign. I will look at these with a lot of assets I purchase because I believe it's good just to have these as kind of a warning sign for the future, to have them as kind of a warning sign to me at least, saying, okay, there's too much buy volume going on, there's too much sell volume, we got to do something about this, red flag, siren, something's going on here. And again, same thing with the MACD. Okay, we're entering the red zone here. That means that it's, probably a better time to sell. So that is, kind of what I take into account with these indicators. Again, they don't mean everything, but they do mean something. So with that being said, I hope you guys enjoyed the video. Thank you so much for all the love on the channel, guys, recently. It's been amazing. I really do appreciate it. If you guys are new, make sure to drop a like, subscribe for daily Shiba Inu videos, and of course, check out Webull. Top of the link down below in the description. My name is Matt. See you guys on the next one. Peace.